The market teaches speed. Gann taught architecture. The paradox is simple. The perfect trade is constructed in time, not taken in price. Crowds chase ticks. The professional measures windows. Gann called it the law of vibration. The market's movement is orderly, harmonic, and timed like a master clock. When the clock aligns, price follows. When it does not, price deceives. In those first moments when everyone feels urgency, the rule-based trader does the most difficult thing: waits. We trust this because it rests on law, not hope. Time governs price. Confirmation outranks prediction. Structure matters more than sensation. Gann built positions the way a craftsman raises a bridge. Lay foundations, test the load, then open the span. The pain, FOMO, overtrading, the boredom that whispers do something, is not solved by more action, but by a measured plan that forbids it until conditions are met. If this inversion intrigues you, stay with me. Our blueprint begins with 3 pillars. First, a time confluence, a cycle, a season, an anniversary window, something that says the clock is near a turn. Second, price structure, a swing chart reducing noise to clear steps, and the law of overbalance to define when a trend has truly shifted. Third, volume behavior, the quiet retest, the secondary test, the low volume return to old levels that signals accumulation or distribution. Only when these agree does a trade exist. Before that, there is only noise. The feeling of mastery is not excitement. It is calm recognition. You will observe, confirm, align. You will accept that many days are scaffolding, few are execution. The market rewards boredom. So if patience is the foundation, what exactly are we waiting to construct? In the next step, we mark time itself, then let price prove it deserves us to act. Time dominates price. That is the paradox that converts prediction into preparation. Precision, in Gann's method, is not guessing a number, but recognizing a moment when the market's internal clock is ready to release or absorb pressure. We begin by marking time as an architect marks load-bearing walls. Daily swings provide the heartbeat. Weekly rhythms set direction. Monthly cycles define pressure changes, while seasonal and anniversary windows reveal the market's recurring memory. Where 2 or more of these cycles converge, the clock strikes possibility. The enemy here is the illusion of randomness and the impulse to force entries in barren time. Most losses are born in the wrong season. The rule is simple and definite: no action without temporal confluence. At minimum, align one active cycle with a higher frame daily with weekly, weekly with monthly, or a monthly turn with a seasonal or anniversary date. The market broadcasts these moments through vibration-measured intervals from prior highs and lows, 30456090180360 counts, and quarter-year turns. Mark them on the chart as windows, not guarantees. Gann. Angles translate this time law into a time-price balance. The 1x, 1 angle, 1 unit of price per 1 unit of time acts like a level in a builder's hand. When price respects the angle into a time window, harmony is present. When it accelerates or lags, disharmony warns of exhaustion or accumulation. The task is orderly. Count cycles, draw angles, record anniversaries, and wait. Boredom becomes disciplined surveillance. This is active patience. You are not idle. You are measuring. You observe how price approaches the window, fast into it, or slow and compressing. You note whether prior swing lengths are shortening, an early clue that energy is resetting. Yet time alone is a scaffold, not a structure. The next demand is structural integrity. Now that we know when to build, we ask what must be built. Trend geometry, swing charts, and the law of overbalance will define whether a turn is probable or merely imagined. Time has given us the window. Now we ask the market to show its par, structure. Here is the paradox. Rising prices are not automatically bullish, and falling prices are not automatically bearish. Strength is not speed. Strength is geometry. Gann used the swing chart to strip noise to its load-bearing beams. You mark a pivot high, then a pivot low, and you do not change direction until price definitively takes out the prior swing point by a measured amount. The line becomes a metronome. Each swing prints the market's intention in a definite, mechanical way. From this clarity emerges the law of overbalance. A trend remains in force until a counterswing exceeds the largest prior correction of the same degree in price or in time. Measure the biggest pullback in an advance. As long as declines remain smaller, the chassis holds. When a reaction grows larger than that maximum, structure has shifted. Hope ends, evidence speaks. This law turns ambiguity into arithmetic and turns fear into protocol. Next, we study crossings of old levels and the discipline of the secondary test. A breakout above a prior high is only the first draft. The market must return to the breakout zone and hold it on reduced range and lighter volume. That secondary test is the bolt that locks the beam. In accumulation, you will see narrowing ranges, higher lows, and low volume returns to demand zones. In distribution, you will see failed rallies, widening effort with diminishing result, and upthrusts that cannot hold above resistance. The swing chart shows the path. The overbalance defines the boundary. Crossing old levels and testing confirm whether the structure is authentic. This geometry quiets the mind. You stop predicting and start measuring. The feeling is orderly, measured, harmonic. Yet structure alone is not final. The market still owes us a voice of intent. Volume must testify, and tests must verify. One more confirmation remains before the blueprint allows execution. Obvious volume often deceives. Truth hides in the quiet return. The crowd treats the first surge as proof. The professional treats it as a question. Confirmation, not prediction, turns pattern into probability. Our protocol is a trinity. Time, structure, and behavior must agree or we stand aside. Time first. A setup must live inside a confluence window, a counted cycle aligning with a seasonal or anniversary rhythm. No clock, no trade. Harmony before ambition. Structure next. Price must do more than excite. It must cross an old level with authority and then prove it by holding that level on a secondary test. The overbalance rule governs bias. Trend remains intact until a counterswing exceeds the largest prior correction. A break without overbalance is theater, not cause. Behavior finally. Volume must authenticate what price claims. In accumulation, expect energy on the drive out of the base and contraction on the return. Low volume retests into former resistance turned support reveal supply exhaustion. In distribution, expansion on breaks, then anemic rallies, back to the breakdown level show demand fatigue. Range tells the same story. Narrowing spread into support, widening out of it. The opposite for shorts. Operational rules are definite. Require at least 2-time confluences. Require a structural break, plus a successful secondary test that closes back above or below the crossed level. Require volume behavior that aligns with the phase. Expansion on cause, contraction on test. Risk sits beyond the secondary test. Size against the overbalanced distance. Abort on disharmony of any leg. When the 3 lights align, action is mechanical. Emotion yields to sequence. Observe, confirm, execute. The reward is calm, not adrenaline. Yet one test still remains. Once entered, can we govern the position with the same orderly discipline that built it? Management completes the architecture and preserves harmony. Obvious signals seduce. Subtle confirmations protect. The confirmation trinity formalizes that protection: time, confluence, structural, validation, and volume authentication. Rule: prediction tempts, confirmation pays. First, time. Require at least 2 temporal alignments, cycle count plus season or anniversary window, so the market's internal clock is not a single note but a chord. Second, price. Demand that structure proves intent. A decisive break and close across an old level, followed by a secondary test that returns to the scene of the break and holds. Overbalance sets the boundary. A trend only changes when the counterswing exceeds the largest prior correction. Until then, treat the move as noise, not signal. Third, volume. Look for effort and result to agree. Expansion through the level, then contraction on the secondary test, communicates absorption. Accumulation often reveals low-volume pullbacks to support. Distribution shows expanding effort on rallies into resistance. If volume swells on the retest, supply is not finished. Stand aside. If volume vanishes and price holds, intent aligns with structure. Add angle harmony. When price respects its 1x1 or related rate through the time window, the move is orderly. When it violates harmony, caution prevails. The operational creed is definite. 3 yeses or no trade. No single confirmation is allowed to overrule the missing others. This is how fear dissolves by converting uncertainty into measured tests. The professional identity is built here. You do not guess, you verify. You do not chase, you require. You do not react, you execute a rule-based checklist. But precision alone is not sufficient. One test still remains the trader. Can you manage a position with the same calm rigor that you used to construct it? The paradox of mechanics is that rules free you only if you obey them. Position management is the continuation of construction by other means. Begin before entry. Define risk in units, not opinions. Fix a constant R per trade so outcomes scale, not swing your emotions. Place the initial stop beyond structural invalidation below the secondary test in a long, above it in a short, or beyond the overbalance threshold if structure fails. If the market cannot hold where it must, you are wrong by design. Entries trigger on confirmation close or on the measured retest. Scaling is permitted only after the retest proves itself with a higher low or lower high on reduced volume. Trail stops in harmony with structure, beneath the last confirmed swing or along the governing 1x1 angle. If angle harmony breaks or a counterswing exceeds prior overbalance, reduce or exit. Time governs exits as well. When the window that birthed the move closes, tighten risk. If progress stalls for a fixed number of bars, no higher high and end sessions for a long except the time stop. Take partial profits at objective levels. Prior major swing, measured move symmetry, or the boundary of the current time window. Limit attempts. 2 tries per setup window, then stand aside. Persistence should be statistical, not stubborn. Record every decision in a ruled journal setup grade. Confirmations, management actions so discipline matures through measured review. The psychological posture is emotional neutrality. Treat each trade as one data point in a long series. Boredom is not a signal. It is a condition to be managed by routine. Ego is not a governor. Your rules are. Management completes the blueprint because exits write the final geometry of risk. Yet a higher skill crowns them all. The wisdom to do nothing when harmony is absent. Mastery culminates not in more trades, but in the nerve to let imperfect setups pass untraded. This is Gann's final paradox. The trades you decline finance the trades you accept. Standing aside is not avoidance. It is enforcement of law. When time lacks confluence, when structure is ambiguous, when the secondary test never appears, when angle and price lose harmony, when volume expands at the wrong moment and falls quiet when it should speak, your decision is definite. Do nothing. The rule is simple, mechanical, and moral. Require at least 2 temporal alignments. Without them, there is no clock. Demand overbalance or a clear break and retest. Without it, there is no structure. Insist on the secondary test on lighter volume. Without it, there is no confirmation. Maintain angle harmony. Without it, there is no equilibrium. One missing piece dissolves the whole. Establish attempt limits inside each window. 2 tries, then retire the idea until the next season. Refuse revenge entries. Refuse almost signals. Refuse noise. Protect attention like capital. Squander neither. By codifying abstention, you reclaim energy for the rare, high-quality alignment. Boredom becomes strategy, not a problem to solve, but a signal that law is working. You log observations, update levels, trace angles, and let the market reveal whether accumulation or distribution is maturing. Your identity shifts from hunter to surveyor. The creed becomes habit. I observe before I act. I confirm before I commit. I exit when time expires. I stand aside when harmony is absent. In this posture, serenity replaces urgency. Statistics replace stories, and the account becomes a record of obedience to principle. Markets repay restraint with longevity. Discipline is not a technique. It is a way of being in time. When the window closes, you let it go and reset the count, calmly, for tomorrow.